Hello. Today's video is going to be a bit of a mixed bag. I actually have a couple different topics I want to talk about. Some good, some not so good, and some that just make you wonder why. So without any further ado, let's just get into it. First, let's start with my grid bot, the Procurator and Equilibrium. I'm running the Procurator on audio, and I'm running Equilibrium on XRP. I have roughly $6 in XRP and roughly $5 in audio. And what you're looking at on the screen is my profits. Actual profits extracted from both bots combined. In essence, my grid bots have reached a point of saturation. That means that my realized profits are now balanced with my unrealized losses. So over time, I'm going to see more and more of these profits accumulate. You can see where the saturation points really take place by the way the profitability stair steps versus slopes outward or plateaus. That really is the point of a successful grid bot, is through time it will naturally saturate. It will reach a point where, with the right asset choices and the right risk mitigation, you will be capable of seeing large amounts of movement in a short period of time. For example, here is a good stair-stepped situation. You see with a short level of profits, or I should say a short time frame for a stair-step level of profits. But here you see a plateau, here you see a plateau, and here you see a plateau. These are where the markets are changing and saturation is at a balance. Now, the longer these bots run, the more they're going to be oversaturated to the point that unless there's a sharp market movement downwards, you will see more steps in a consistency. And that's really the way you want it. You want to see these small little bits of income coming in on a regular basis. That's the whole point of a grid bot. It is, as I said from the beginning of the entire process, a hedge against the market. It is a no-lose situation, providing you have the right asset and enough patience to let it work. I do not recommend poor quality assets. I know a lot of exchanges are pitching coins below 100 million market cap. I don't recommend such coins because of the risk. If you're going to use a grid bot strategy like Equilibrium or the Procurator, use it on a coin that has a consistent market history with at least 1 billion market cap. To be quite honest, audio was a mistake for me. I should never have gotten into it. XRP was a good move, it's consistent, and it's really the bulk of my profits, even though I actually hold less of it right now than I do of audio. So understand your risks. That is critical for profitability. Understanding the saturation point is a second critical point of a grid bot, but that is not always easy to figure out where that is going to be. Saturation points take place when the market remains level or consistent over a period of time. Or in market terms, it remains sideways, where the same price areas are being hit repeatedly both upwards and downwards, creating a consistency in the price cycles. That's what you really want. You don't want coins that have extremes. For example, Bitcoin. If you have too many grids on a Bitcoin market, saturation is going to take a very long time to occur, just because it could very easily change by 50% of its price volume. While coins with price volatility are good to some degree, you don't want the price volatility to be so extreme that it becomes too difficult to manage. The whole point of a grid trading process is literally risk management. Part of your thinking process must be, can I let this run for 2 years? Because it's going to take you at least 4 to 6 months to reach saturation. Depending upon the asset, something like Bitcoin could easily take a year to reach saturation. So it's something that must be underscored. It must be analyzed. It must be carefully evaluated. And your budget must be very well thought out. In my case, my whole budget right now is $70. That's it. And I'm only holding $11 active in money. Now, I do have a few small $1 orders sitting out there waiting to be passed off that I did manually. But that doesn't attribute anything in my account value. And that's really the kind of thinking you want for your account. Risk assessment, risk mitigation, saturation. And you want an asset that you know has a very high probability to be here in 2 years. That really is the critical point of the whole market. You want what you are investing in to be here for a long time. Short-term investing equals long-term losses. This is a numbers game. It's you against every other investor out there trying to make it ahead. And the only way to do that is to think about your risks and how you are going to mitigate taking on more than you should. Okay, didn't want that. Now let's get to the real crux of the matter. Part 2 of this. Jackrabbit has been evolving a lot lately. And with advancements in the new Alpha 1 base code, a lot of changes have occurred. Changes that particularly play into the way Equilibrium and Procurator are going to work. And for that matter, everything else in the Jackrabbit ecosystem. First and foremost, I now have a sponsors button. That's right. If you're not subscribed to Jackrabbit TV, you can sponsor Jackrabbit Relay. And as you can see on the left-hand side, or excuse me, on the right-hand side, it's over here too. Clicking on it will take you to a sponsors page where you can either give a one-time sponsorship or a monthly sponsorship, whichever you prefer. And Jackrabbit is definitely growing rapidly. It's growing in ways that are really hard to keep up with. because some of the considerations I've had to take into account deal with this next part. The part that nobody wants to talk about. So let's get rid of some of the noise and get right to what's going to probably be the meat of this video. Yes, I'm back to beating a dead horse. Back in 2015 through 2017, it was openly touted that hardware wallets were the best way to go for protecting your assets. And even back then, before I really got into cryptocurrencies, I knew that that was just wrong. From the standpoint of my 42 years of programming, my 30 years of working in security, and at least 20 years writing encryption programs, that is wrong. Bottom line, no encryption or hardware wallet is safe from hacking. Anything can be hacked. It's all just a matter of time. The reality is, and I've said this, I don't know how many times now, to be honest, I've actually lost track. If your money is not in motion, it does not belong in the market. Holding cryptocurrencies is non-appreciative. You're not going to get any value at it. There's no dividends. Most hardware wallets don't provide staking of any kind. In fact, I can't think of any that do. If you want to stake, if you want to get involved in peer-to-peer lending, or if you want to get involved in do any other kind of financial transaction where your money is in motion, it must be on an exchange. Hopefully one that has both hot storage and cold storage. Basically an online wallet that you work out of and an offline wallet that they manage in the background to protect your finances as much as possible. The reality is, if you have your money in a hardware wallet, it's already gone. And you won't even know about it while it happens. These are just the headlines of the most recent of literally hundreds of millions of dollars stolen from hacked wallets. Don't keep your money sitting away someplace in a hardware wallet thinking it's safe. It's not. Keep your money in motion and only keep what you need to actually trade. If it's not sitting there as a reserve for a budget, for a worst case scenario, it should be in your bank or on a different exchange, trading something else. Never keep all your eggs in one basket. That time-tested phrase has been around long before I ever existed on this planet and will be here long after I am gone. And its meaning is always the same. Don't trust one single approach. You must diversify your portfolio. You must diversify your exchanges. You must diversify your bank accounts. Don't keep your money in one single place. Don't keep your cryptocurrencies in one single place. Don't think you can't be hacked because you have some fancy hardware wallet, because you will be hacked. If you put everything into one area and you look at the realities of what is, you're going to lose your money. The second rule I always preach: be willing to lose whatever you risk, and only risk what you can afford to lose. Never, ever risk anything you need to live on. Make sure whatever you risk is money that you don't need. You have to understand the consequences of trading. Trading has its risks, and it's not just in losing the trade. It's in the exchange collapsing. It's in the exchange being hacked. It's in some hacker finding a weakness within a blockchain that can drain everybody's wallet. It's within manipulation like what Luna did, Do Kwon's own creator, deliberately undermining the entire architecture, stealing $88 million. There are so many different ways that this is a nightmare that you can't even count them all. And this is just within the last month. If you start looking at the situation over years, it's a whole different thing. I've spoken, for example, about Nomad already on Patreon. $190 million. How many investors were involved in that? Celsius, 3AC, BlackRock. We can go on here. How many millions of investors lost everything because they kept all their money in a place thinking it was magically protected? Your money is not magically protected. There's nothing that says your bank account can be hacked, let alone a cryptocurrency exchange or a hardware wallet or any other piece of storage equipment that you might put something precious on. All it takes to hack any piece of software on the planet is time. And with the computers becoming more and more advanced and more powerful, time is becoming smaller. What used to take 22 years now only takes a matter of seconds. Don't be lulled into these influencers pawning off some new hardware wallet or some other garbage all over YouTube thinking you're going to be safe. You're not. The influencers don't care about you. They're influencers for a reason. They're there to influence you to spend your money. They're there to take your money. Let's just be honest about it. And if they don't take it directly, then they take it indirectly by working for the company that pays them to do so. The only one that is going to look after your finances is you. And in a world with scams and frauds that flood the market to the point that the legal voices in it get drowned out, it's hard to figure out who the scammers really are. So very simple. If it looks too good to be true, it always is. If somebody says they're unhackable, rest assured they've been hacked and they're lying about it. Understand, beyond all reason, you have to really focus on your own security. Here's another one. $200 million gone. You can go on forever looking at this. NFTs being stolen. Virtual real estate being hijacked. It goes on and on and on. Don't trust the market to protect you. $32 million. Now that was returned. But was it? How much of it went to lawyers, private investigators, or people recovering this money? How many of the actual investors are going to see a part of that 32.6 million? That's the second point. even though Nomad got their money back, are the people who invested or who had money in Nomad ever going to get their money back? Don't fall for these gimmicks. Realize that this market, like any market, has its risks. And this isn't just a cryptocurrency market. It doesn't just deal with Binance, KuCoin, Huobi, FTX. This transcends beyond that to Schwab, TD Ameritrade, Scottrade, Fidelity. Any brokerage firm or exchange can be hacked with time. Understand your risks. Understand how those risks can impact your account. And yes, you may get your money back. Then again, like Do Kwon and Luna, it may all be gone. Even if South Korea does prosecute him and throw him into the deepest pit they can dig, the chances of people getting their money back are almost next to zero. Understand your own abilities. A lot of good programs on the market simply get buried by fly-by-night scams. Now let's talk about the last part of this video. The influencers. I've already mentioned that within the previous part about how they're nothing but scammers. We're on YouTube, and I'm going to show you exactly what I'm talking about. Just by looking at what you see on the screen, it's easy to see who's making the money here. And it ain't you. 38,000 views just for the first video. This guy's making $1,000 a month preaching a process that's idiotic. 2,000%. It should be 2,000% volatility, not price action. That's not to say that there aren't good opportunities in the market. But reality is very simple. Most of what you see here, and I'm going to be generous with this number, most of what you see here is scams. 97% win rate with emojis with dollar signs in their face. Scam. Magic indicator. The only magic in this is that people are actually giving this guy money through whatever his system is using. 198,000 views on this one video. 225,000 views in this video. These are examples of influencers that are there to do nothing more than take your money. Yes, I said it, and people aren't going to like me for saying it. The reality is, there is no get-rich-quick system. 2,000% a day. Scam. But it's got 362,000 views. Again, he's making easily $600 to $1,000 a month just passing off lies. The kind of stuff that's going to cause you to lose your money if you follow it. Ultimate scalping strategy. There is no such thing as ultimate anything, except the ultimate way to lose your money. Secret unknown indicator. Well, if it was a secret and unknown, it isn't now, which means everybody's used it by now after 112,000 views, so your opportunities are already gone. All of this. Now you can see some that do have legitimacy in them. They don't hype, they don't necessarily indicate one way or the other that it's going to make you rich. So while there are some good channels, understand 90% of them are people trying to take your money or people making money because they're robbing advertisers with false claims. Remember, advertisers pay for spots on YouTube. So these people make money off of the advertisers. So they're not just lying to the people watching the videos, they're stealing from the advertisers because they're giving out incorrect information. Like this one, 71% win rate and 50x leverage. If you use 50x leverage, you're going to wipe your account out. And always showing a chart, always showing the past. That's the other common theme you will see consistently. Their back tests pick the perfect ones, like this one. A 197% increase or a 527% increase. The reality is, those don't happen every day. And when they do happen, usually most people aren't even aware of it until long afterwards. All of this stuff about you should have bought Bitcoin back in 2010 is nonsense. It's the kind of manipulation that these influencers use to take money. Nobody knew whether Bitcoin was going to be a success or a complete failure. So saying you should have done something back then is just a bunch of bullshit. Yes, I said it. I'm not being nice about it. This kind of crap hurts people wanting to really get in the market. Investing is risky. There's no magic balls, no magic indicators, no perfect indicators, no super profitable ways to trade. There are 1,001 different ways to make money through investing. Some lead to millionaires. The majority will give you 10 or 20 cents. You must understand what you are trading. You must understand why you are trading. It's easy to see the gimmicks. No one knows this secret. Right there, that's telling you they're trying to pawn something off. Best 5-minute profit. No. Because as soon as you start applying your fees with your exchange, it's the best way for you to lose money. 87.5% win rate. That was the past. Maybe it did back then. What's it now? See, even without watching the videos, you can see on the charts which ones are going to be worth looking at versus which ones are going to be complete and total ripoffs. Especially when you think about your fees. If you don't pay any fees, then yes, you can make a lot of money all day long and not worry about it. But as soon as you start slapping on a 0.1% fee every time you make a purchase, or every time you make a sale, or a 10 pip spread to cover the cost of that purchase, you start losing money. Here's 90% win rate. No. That is virtually impossible and provable very easy. And of course they show a hand-picked one spot that hardly anybody is actually going to be in the right place for. Again, let me emphasize, trading is profitable. Trading is a wonderful way to make a few bucks here, a few bucks there, and if you have enough, you might even be able to make a decent level of money off of it consistently to pay some bills or live on, depending upon your cost of living. But it's not overnight. You're not going to take $20 to $52,000. You're not going to instantly do this. Make $400 a week. Well, first of all, even if you follow the 2-to-1 ratio, $400 a week, 1%, that would be 1% of the total budget. If you have that kind of money, this might work. How many people do? 100% win. Right there. That tells you everything. So you can see how the influencers work with all of the rest of the gimmicks, and it just stockpiles. So whether you're on YouTube, whether you're looking at the news articles that are saying how many wallets have been hacked, influencers are scammers. One feeds the other because they're both the same. Now, I don't know all the laws in other parts of the country, but I can tell you from the United States, you cannot legally encourage someone to purchase something of an investment type without being a licensed financial advisor, a financial planner, or something of that nature. You can recommend they investigate it. You can recommend they consider it. You can recommend they talk to a financial professional, but you cannot straight out say you think they should buy BTC for whatever reason. Whether it's because it's the bottom of the market or it's the next greatest thing. Doing so by U.S. law is legally fraud. So any video that says you should go out and buy something and they don't have the licenses to back it up is committing fraud. And that fraud will be seen in your losses. As an educator, I can tell you this is worth investigating. I can tell you this is worth your consideration. I can tell you this is worth actually looking at. I cannot tell you you should buy it. The only one that truly knows your financial situation is you. Unless you specifically go to a licensed and trained financial advisor, and even then, they truly don't understand your financial situation as good as you do. And we can see right here on the screen, both of these videos should be reasons to run the other way. End of story. This nonsense about going to the moon or buy now before you miss out on an opportunity in a lifetime. All of it are scams. Scams perpetuated by people are going to get something out of it. Whether it's recovering from their bad decisions or whether they've been paid to convince you to give up your money. It goes back to what I've been saying all along for this entire video. Influencers are scammers. End of story. It's not hard to see and to apply very simply. If it looks too good to be true, then it is. Every one of these examples look too good to be true. and every one of them are going to turn out that way. First of all, this is YouTube. There's a reason why millionaires are millionaires, because they don't tell you how they got there. If they told you the exact secrets of how to make $1 million and for you to become a millionaire, everybody would be millionaires and money would be worthless. So common sense goes a long ways in this market to protecting you. Because rest assured, these people don't care about you. They only care about your money and it becoming their money. Don't fall for this. As I said, there are good strategies. There are good trading techniques to learn from. And you can spot the difference very easily. But you can spot all of the nonsense very quickly as well. I really am tired of beating this horse. I wish it just stayed dead. But as long as these scams exist, I need to make sure you're aware of them. Don't fall for these traps. There's only one guarantee in trading. Sooner or later, you're going to lose money. That's the only guarantee you have. There is no 99% win rate. There is no 100% win rate. In fact, that's even impossible. It just doesn't happen. Realistically, if you get a 60 to 75% win rate as an average of 1,000 trades, that's good. But that win rate is going to have a low profitability, like 0.5%. You're not going to get a 99% win rate with a 5% profitability. If you are an exchange where you don't pay fees, you could walk away with a 0.1% profit and make that all day long. But you could easily lose that much as well. And as long as you pay trading fees, you're always going to lose more than you win with these gimmicks. Trading requires a science, an understanding, research, education. You don't need to pay for somebody to teach you this stuff, but you do need to take the time to learn it on your own. There are good quality classes available for those that want to learn from a paid professional, but there's plenty of free information and plenty of free resources, including demo accounts, where you can safely learn all of these things without risking any money. Whatever product is being sold on the market, the bottom line, don't purchase anything until you spend time doing your research. Doesn't matter what the product is, whether it's an indicator, whether it's a course, whether it's somebody teaching you the way I do through Discord and Patreon and TradingView, it doesn't matter. Don't spend anything until you research. If you see this kind of crap, they're not worth your time. They're not worth your money because they're not going to be there to help you when you need or want real help. They're there to take your money and kick you out to the street. That's all they're going to do. Real trading doesn't happen fast. Real trading is about the losses along the way. Secret new indicator, yeah, right. Secret new strategy, 97.2%. These things just scream fraud from the beginning, but yet look at the views on them. Look at how many people watch them and think about the money they're making from the advertisements being put in the middle of these things, or paid sponsors, or some other nonsense. Take your time. Learn through testing and analysis. Learn through responsible trading that does several different tests, several different analyses. It shows you the numbers that you can actually go back and reproduce on your own. Understand your risks. That's the critical point. Doesn't matter what their risks are, doesn't matter what their budget is. What are your risks? What is your budget? Those are the critical points you need to focus on. That is the emphasis of your trading. Nothing else matters because they don't give a damn about your trading. And that goes even for licensed financial advisors. If you go into, say, Fidelity and open up an account and say you want to invest $100,000, they'll be glad to do it. They'll be glad to take your money, and they'll give you some mutual fund and say, you're good to go. Just sit back and let it do whatever it needs to do. But here's the problem. What if tomorrow the whole market crashes? Think February 2020. Guess what? You don't get the money back. The salesman that gave you the pitch, he gets to keep his commission. And he made a very hefty commission on a $100,000 deposit. That is the whole point of trading. And that's the hidden things that they don't tell you. You come in, yeah, you take your $1 million, take your $100,000, whatever, you put it in the market. I'm going to get $10,000. In this story, I keep that money no matter what happens. You lose money, too bad. I keep that commission. That's the way the trading world works. They don't have a vested interest in your success. They have a vested interest in selling their product. It could be a cryptocurrency, it could be books, it could be YouTube channels for entertainment. It doesn't matter. And any business, including my own. My business is about selling my business. My business is about making income for my business. And my product is my knowledge, the education I give you. So every business has that model. But in my case, and which is true with education in general, your education matters because if you aren't getting the kind of education you think you should be getting, you're not going to continue to purchase my services. My business does not run on a give me $10,000 and I will teach you the world approach. My business is very simple. I teach you, I answer your questions, I try to provide the best resource I can that you can learn from. But you don't pay up front. It's month to month. Unlike colleges and universities where you pay exorbitant amount of monies to buy a course up front, and then hopefully by the end of it, you'll know something. I don't run that kind of a business. And a lot of good investors and teachers on the market that really want to help with their knowledge don't. They offer legitimate courses. Finding them is a different story. And when you see things like this on the screen, people making idiots out of themselves, why in the hell should you trust him for financial advice? He's acting like an idiot. He looks like an idiot in this story. This is your money, not his money. Why would you trust him with your money? You wouldn't. You need to take proper precautions in protecting yourself in this market. We can go on indefinitely, but hopefully you get the point. There comes to be a certain point where you just have to really look at the market and look at what you're learning. Look at your goals, your finances, your situation. And it's easy. It's easy to see scams. It's easy to spot them. Don't be in a rush to lose your money. Turn $100 into $70,000. 90% win rate. Look at the views on these videos and think about the money these people are making. And how many people have actually tried this without taking the steps to evaluate it, run it in a paper trading account, back testing, analysis, all of the things that need to go into properly making sure something works. And most importantly, fees. A lot of these people don't want to talk about that because as soon as you start talking about the amount of fees you pay per trade, everything falls apart. Don't be afraid to ask questions for services you're interested in. If the person's not willing to answer those questions or just gives you generic answers, that should tell you everything you need to have right then and there to avoid them. Turn $100 into $5,000. New secret indicator. Scalp like a pro. Turn $1,000 into $50,000. If it was that easy, everybody could do it, and there wouldn't be poor people in the streets. You know, I could just keep going on and on with this. 100% profitable. The first real point of investing that I think is really critical when you're learning to invest or you're looking for somebody to teach you or for a product to purchase to help you invest. Look at the reality of what they are teaching you. Does what they say sound realistic? Does what they say actually fit real world situations? That's really, I think, one of the first points of evaluating anybody on the market, whether it's YouTube or anybody else. It should be really a very defensive process. Take it from the standpoint that they're there to get your money. And in reality, that's the case. And it doesn't matter what business you deal with. Walmart, Target, Zodi's, Zayres, K Jewelers, Shopko, Kmart, Jimmy John's, Burger King, all of them are out to take your money. It's just a matter of not of whether you want to give them your money for their products and services that they say they are going to give you. Treat trading the same way you treat a real world business where you're buying a hamburger or you're buying a pair of shoes. There's no difference. Product is product. You're not going to go buy a pair of shoes that when the salesman says it'll let you jump to the moon, because you know that's a bunch of rubbish. Don't buy a cryptocurrency trading system that makes the same kind of outlandish, wild, and inexcusable claims. Oh. I've probably beat this horse into the ground now to the point that its bones are dust. And hopefully I won't have to come back and beat it again. But this last 2 weeks has just been nothing but one hack after another, with people losing hundreds of millions of dollars. Nomad is taking things in their own hands, offering a reward, which is good. Because one thing that thieves are, the greedy bastards that will turn on each other faster than nothing. And that might actually benefit Nomad and being able to get its customers' money back to them. There needs to be more proactive situations like what Nomad is doing in the crypto market, the stock market, and the Forex market. So, as you move forward, think defensively, just like you drive defensively. Everybody is out to take your money and you've got to protect it. There's no difference in the cryptocurrency world as it is in real life. And the very same defensive measures apply here as they do everywhere else. Now, if you'd like to hear me rant and ramble over stupid stuff, give this video a like. And no, I'm not going to go playing loud music or putting my face on the screen with stupid pictures or some of the other nonsense I see. You're just going to get me talking, hopefully helping you through this crazy mess. And not falling for some of these disgusting and inexcusable scams. Anyway, leave a comment. Let me know some of the crazy stuff you've seen on YouTube or even in real life. Like, share, subscribe. No, I'm not an influencer, and, well, I'm far from getting paid from anything. But nonetheless, it does help at least other people to find information that might keep them from putting their life savings in the wrong place. Until next time.